I think the thing for me is don't listen to the advice of your mates from the football club that have never done it. I see that all the time. Everybody knows somebody that's done it and done it wrong. It's a very emotional story. You need to delete the emotion and get back to the facts.
Andrew, thank you for joining us today.
Thanks, Robbie.
Appreciate you taking the time out of your busy schedule.
Pleasure.
I thought I'd bring you in for a chat with Steve and I, so we can discuss a few things about who you are and what you do. So please introduce yourself for us.
So my name's Andrew Jackson. I run a property called JKB Property Solutions. At the heart, I'm a property investor myself, but essentially my business has been born out of helping clients wanting to advance their own personal wealth through investing with property and real estate.
Beautiful. And I think we had a bit of a chat before. You've got quite a nice story, quite a nice history. So yeah, tell us a bit about how you sort of started on this journey.
Well, I started for myself 30 years ago, made my first property investment, and the purpose for doing that was to help set my children up. Got 3 young kids at the time, and I was thinking property's never gonna get cheaper than what it is today. It's always gonna get more expensive.
Yeah.
So I wanted to help them advance. And of course, one property, held it, leveraged it, got into 2, 2 becomes 3, 3 becomes 4. And before you know it, I had a business model for helping other people. I got retrenched from my job and did nothing for 18 months and decided at that point in time to start the business. That's where it's gone from there.
And you mentioned your previous job, that was quite important. So previously, what were you doing?
Yeah, so I'm a finance background guy. I had 23 years at Westpac, and then I did another years at Aussie Home Loans, doing 7 years there. So yeah, finance has always been my thing. I've always loved the thought of compound interest and understanding how to leverage to actually increase your net wealth. So that's essentially the heart of the business that I do. It's 2 parts. It's around property investment consulting, so teaching people about buying structures, finance structures, buying entities, property research. And then once the client says, yes, I'd like to go ahead, that makes sense for me, then I kind of change mode and become like a buyer's agent and dealing with land brokers and then builders.
You raise a really good point, and I think we've had that conversation a few times, Robbie, as well. I talk about having the right team around you. So typically, if you're someone trying to get into market for the first time, you really don't have a team around you. Accountant, brokers, building consultants, real estate agents. To collect that team is really hard to do. So you're almost a bit of a one-stop shop and say, hey, I actually can do all of those roles to some degree and advice. Would that be correct?
Yeah, absolutely. I've often described myself as like a property concierge. So if a client comes in brand new and they go, I'd love to do this, but I don't have anybody to help me with the finance, then I've got a team of trusted brokers that I refer out to, building consultants, removalists, conveyancers, building inspectors, like you name it. Even for the clients that have got existing properties and they go, oh, I've got a problem with my toilet, I've got a plumber that I can help them with. So yeah, I'm really happy to help people and refer all those specialist services out.
Makes a huge difference. I think you use Andrew quite a bit, don't you, Rob?
Yes, it's been great.
How's your experience been?
It's great because again, if someone comes to me about property advice in general, I haven't done into the property market as yet, so I can go, I know someone that you can speak to, because it's not just a biased opinion coming from me. It's someone that can sort of sit in the middle, who's been through the process himself, who's dealt with investors in the past, but also can sort of answer questions in a way that it gives a bit more of an educated response than what I could do as well.
Yeah, trust is important as well, especially if you're going to make a big investment choice. You want to be able to trust someone and know that they're putting you in front of the right people.
I agree. And wholeheartedly, the experience that I have is that you want to actually buy from somebody that's actually been there and done that. It makes no sense for me for anybody to buy an investment property from somebody that doesn't actually own their own home, let alone have an investment property.
Yeah, absolutely.
So to have some experience and have over 30 years of experience that I'm happy to share and allow people to lean into and leverage that experience, I think is really critical.
Yeah, good point. I think also too, as building consultants, sometimes we might be a building consultant. Sometimes we might be in the industry for 10 years, someone's been in it for 1 year, and sometimes people have been in it for 20 plus years. So that experience and seeing different markets at different times can certainly add value when people are trying to make decisions, and also when you're trying to guide them through the building process.
And there's so many variables in this game. Like, I've experienced periods where we've had 1.99% interest rates, and I've also been property investing when we've had 13% interest rates.
Yeah, very different.
Tight regulation markets around who's getting lent what money, and then times where banks are very loose with money. I've seen property prices where I've been selling packages at $300,000. Now we're doing $900,000. Like, so it's just.
I think you raised another really good point there. You just sort of hit the button on the fact that today, the way someone lends money today or an institution lends money today can be very different tomorrow. And if you're not across the different changes at the different times, then you might see someone today and they say, no, sorry, you can't borrow any money, you don't service. And then literally a week later, you could potentially be able to get a loan with someone as well very quickly. So,
Absolutely.
So having a team of people and knowing what those changes are, which is hard to know at the time, but to someone that actually knows that, makes a big difference as well.
The other big thing I see is a lot of people go, oh, I've got a relationship with my bank. I'd like to go back to my banker. And they go to their bank and the bank says, sorry, you're tapped out. And I go, well, why don't we go and see a broker? Because the two things about brokers, convenience and perspective. You sit down with a broker and they're going to go to 25, maybe 30 different lenders. And for me, it's about how do you get into the market? Because if you think that you want to go away for 6 months and save some more money because that's what your banker has told you to do, the market's going to grow quicker than you can save.
Absolutely.
So you need to be able to leverage as quickly as you can and get into the market. And even if that means you get a slightly higher interest rate or a slightly higher fee, you're better off still getting into the market and then having that asset grow.
Absolutely. I suppose that leads us to our next question. Obviously, we know your experience, you've been doing it for a while. So for you, I'm seeing in the marketplace right now is a lot of first-time investors really coming into the market, which is great, but also sometimes worries me a bit because their I suppose, knowledge is quite limited. So what are you seeing in the market right now in terms of that investment space?
Yeah, definitely a lot of first-timers. I think because we've had so much equity growth, I also hear a lot of noise about people talking about what the government's spending their tax money on. Nobody's happy about what the government's doing with that. So they're looking at ways in which they can minimise their tax bill, and property investment is a great way to do. So I see it as being a double-edged sword. You're minimising your taxes, you're actually getting an asset in the market and that's growing. Typically clients for me are mum and dad, 2 kids and a black Labrador. They seem to be the type of clients.
That was the main thing, yeah.
Well, you can't go past the cute factor. But yeah, it's they've recognised they've got equity in their property and they want to do something about it, and they want to do it either for themselves or for their future retirement or for their children, but they just don't know where to start.
Great. What advice would you give them, I suppose, in that sense?
For me, investing in property is like playing Monopoly. You don't just roll the dice and land on the first thing and then buy it straight away. You've actually got to have a strategy in place. So, and that is part of that building the team around you. So it's like, there's no point me building a purchase strategy if we don't know what the money looks like. There's no point understanding what the money looks like if we don't know what the borrowing entity looks like. So whether it's the broker, the accountant, the financial planner, the building consultant, like everybody needs to be part of that team to help the client. And then once we've got a clear strategy, it's easy for us to execute.
I think you hit the nail on the head there. It's about the strategy, because I see lots of people coming in, first-time investors. We start to have a bit of a conversation, and the first thing that sort of pops out for me is, well, what are you trying to achieve? What's actually your strategy? And most of them sort of sit back and go, well, I don't know, I just heard that this is the right thing to do. So my question is, go back to those people, speak to them and get a strategy, because there are multiple strategies. So from your perspective, what would you see as the main strategies or vehicles that people could do if they're entering into the market? What would we say?
Ultimately, I think any property is good property, but there's better properties than others.
Right.
So I see lots of clients come in and go, look, I'm thinking about getting an inner city apartment because they've promised me a BMW if I sign a contract by a certain date,
Where's
right?
that one?
Yeah.
Sounds like a good deal to me.
At the end of the day, I mean, if somebody says they want to get into property, I'll be happy for them to do it. But I know how I've built my personal wealth, and that's always through buying land and then building a house on it. I want to own the title of that block, no community titles, no strata titles. Right, okay. It's all just Torrens titled. Right. And for me, it's around just buying that, building it, holding it, leveraging it, doing it again. It's a pretty simple process.
That's quite a stable, steady process. I think we sort of touched on it before. We use that process. What we sort of see in the marketplace, at some point your servicing or the ability to keep sort of repeating that stops. What would be your sort of advice on that, or your experience around that?
It hasn't become an issue for me because I've always taken the approach of paying down debt rather than just holding interest only. And what that does is that frees up cash flow for me as well. So it hasn't become an issue for me. We've got properties inside of super and outside of super as well. So again, it's like every client is different. Everybody's got different background, different levels of income, different family sizes, different reasons for doing this. So this is where the team comes together. So they have the financial plan in the account, everybody providing their piece of advice to actually come together with that strategy for the client.
Right. So you hear other things like renovating, flipping, buying, holding, buying a particular suburb. So from your perspective, you just purely like to buy the land, build on it, hold it, get some equity, and then go again.
Yep, absolutely. I like new things. I like new cars. I like new houses. I like warranties on stuff. I want to know that, you know, if, say the oven breaks down 3 months in on a brand new property, I'm going to go back to the builder and say, hey, the oven's broken. If I buy the old house next door, there's no guarantee. If that hot water service goes tomorrow, then, you know, I've got a $2,000 bill. And in my experience, new properties will rent sooner. They'll rent for a little bit more money. They're looked after better by the tenants. It's easier for the property manager to manage the property, and the tenants tend to stay around longer.
Right.
So I like that because that obviously increases your rental yield as well.
And yeah, well, changing a tenant every 12 months can be quite problematic in itself. So you want to find a long-term tenant and changing them over less.
Yes, correct.
Far more advantageous. Yeah, absolutely.
AJ, you come up with the name JKP Property. What does that mean, and how did you come up with the name?
So essentially it just means just keep building, because that's what I do.
That should be your motto, Rob.
Look, I think it makes sense for my business because it just comes out of my own personal strategy. It's worked for me, it's worked well. I don't have a massive portfolio, but it's very profitable. And it's profitable on the basis that it's always brand new. You know, I don't have the maintenance issues. I don't have any of the concerns that people would get if they're buying old properties or buying Airbnb properties. It's long-term tenancies and brand new properties. It keeps the cost down. It's easy for me to get valuations done on the property and just leverage and go again.
Obviously, we're in the building game. We obviously do construction. House and land is something that we obviously do quite a lot of. So obviously, yes, we're obviously pro that strategy. I've tried multiple different strategies as well. I've done a bit of everything. I think sometimes the market can change, and sometimes one strategy that's been good for maybe 5 or 10 years does, I suppose, start to wear out and sort of move into another one. But certainly, I think the strategy you're talking about is very relevant in today's market. And obviously, people are making money on other strategies as well. So I suppose if, let's say I'm a first-time investor and looking to get into the market, and I'd have a chat with you, how would we do that? What happens?
Essentially, first thing I do is it's called a client discovery session. So we're sitting down and understanding what age you are now, what age you want to retire at, what's your current income level, what would your income level in retirement like to look like, what are your goals in retirement, and then from there work out if we would spend a certain amount of money towards a house and land package, then what would that do for your taxable income? How quickly would that get you to that retirement goal? And as I said before, everybody's different. You know, I've got clients that come to me at the age of 53 and want to retire at 60 and they're doing their first one.
Wow.
And then I've got other clients that are, you know, 23, 25, FIFO workers living at home with mum and dad still and knowing that they've got all this income and they want to do something with it. Right. So there's no one size fits all as far as the strategy goes. But for me, it's always a one size fits all outcome. Like I get clients come to me and say, I want an apartment or I want an Airbnb or I want a renovator's delight. And that's great. I'm happy for them to do that because it gets them into the market, but that's not where my bread and butter sits.
Right, okay, so if someone wanted to do a renovation, you would say, well, I sort of can't help you with that particular strategy, but you know, here's maybe a way to move forward.
Absolutely. I'm happy to add value to clients where I can. So things like, you know, if I can help out with the property report, which shows them how long the property's been on the market, what was the starting price, how much has it been discounted, here's how I think would be best to buy that property. I'm happy to give all of that guidance, but when it comes to, can you do the reno? No.
And you've worked with Andrew quite a bit, actually, haven't you?
Yeah, done plenty of work with him. I've also played golf with him, so he's a great person to be next to when you get hit in the head.
Oh, you were there on the day?
Yeah, I was,
oh,
yes.
Fantastic.
Yeah.
Okay, there you go.
Now, I like dealing with Robbie too, and I like ABC. And one of the things I say to clients a lot is when we buy a block of land, we want to get a functional floor plan. And some builders that I've dealt with in the past, they're very rigid and structured, and or they're happy to make changes at a massive cost to the client. Yeah. And one of the things that I love about dealing with Robbie is he'd come to me with floor plans and go, here's the base floor plan, but we can make this change for free. Right. And sometimes it's the littlest things like a master bedroom at the front of the house, or we just push it back a little bit, bring the living room to the front. Yeah. We find that might earn the landlord an extra $10 worth of rent every week.
Yeah, fantastic. That's what we do well. I think ABC Metrofund do standard options, which gives you multiple different options for that particular design. The great thing about that, it's been designed in that way. So instead of us trying to make all these changes, we've got these standard options. So very quick, very fast, and very affordable to do. So
and suitable for 10 metre wide blocks, 11 metre wide blocks, 12.5 metre wide blocks. Like you've got designs that will match any sort of block of land that I can put my clients onto.
Just on that, there's this conversation today around estates versus what we call infill or normal land that you see in a normal suburb that's already established. Do you have a preference on, infills versus estates, benefits for estates versus not estates? What's been your experience?
I like estates, again, because everything is brand new. And estates now, they're not like the estates of 20 years ago. Right. Like, we're seeing water parks, barbecue areas, nature parks, bike tracks, outdoor gymnasiums. There is so much on offer. And on the fringes of these estates, childcare centres, medical centres, supermarkets even. So, they are creating little community hubs, which I think is fantastic. Where I'm seeing more infill stuff is clients coming to me going, I've got an older house, it's falling down around me. I don't like gardening as much as I used to. I'm connected to the land and I'm connected to my community, but I still want a brand new home. And that enters a conversation about, have you considered doing a subdivision? Then what we can do is build you a brand new home on one side. Right. We can build you a brand new home to sell on the other side.
So more like a JV scenario.
Yeah.
Where do you find they go for 12 to 18 months?
Yeah, it is a challenge, particularly in such a tight rental market, but it kind of, it reinforces why they're doing it, because they go, well, if it's difficult for you to find a rental property, this is why you need to have an investment property. So, but most people will go, right, I'll find a family member or a friend to go and live with for a period of time. Yeah. And again, the ABC and Metrocon experience is that I can say to them, let's do this and we'll build you a house within 12 months. Yeah. Probably going to be 7 months, but let's allocate 12. Whereas, I had a house built across the road from me in Northgate. Took them nearly 2.5 years to build it with a custom builder. Yeah,
we've had that conversation about price before, and a lot of people don't factor in the actual holding costs.
Yeah.
And if you're renting a property or you're an investor, if you can rent that property in 7 months' time versus 2 years' time, that's almost greater than 12 months of no income and a lot of costs, and that can really sort of stop you from sort of getting onto the next one really quickly as well. So people underestimate the power of being able to have really quick build times and some certainty around when those builds are going to be actually completed.
Yeah.
Coming back to the estates, I think really, really important. I think when we're trying to price homes, what estates can do is they give you a lot of information up front. Where are the services, the building envelope plans, what requirements you need to build the house in there. More often than not, we might have built a couple of homes in there already, so we've got a really good idea on what those footing costs are going to be. So as a building consultant, especially when we're trying to work with customers that have budgets and certain things that they want to sort of maintain, it's very easy for us to go, hey, if we build in this particular estate, we know what those costs are going to be, we can control them a bit more. Whereas when we go into infills, we're dealing with so many unknowns, and so the risk or costs can be a lot higher outside of the estate as well.
Absolutely. Yeah, absolutely. Robbie and I, we've done several deals in like Brookmont Estate out at Andrews Farm. We've done Mount Barker as well. And that's absolutely one thing that Robbie does really well is he'll come back to me and say, we've built here, here and here. Yeah, so my best estimate of footing costs is going to be here. And I always say to Robbie, let's just put it a little bit higher, because I'd much sooner budget for more and have it come in less than the other way around.
Yeah, absolutely.
There's exactly nothing more frustrating than, getting a variation for 30 grand because your footings haven't been calculated properly.
That's a big thing as well. Unfortunately, in our industry, you'll get a lot of people that will try and win the business and maybe go in a bit lower, a bit lighter, only to find out the customer then has to sort of find some extra money. Yeah. Whereas we do try and do it a bit the other way so that we know exactly what to budget for. We can make better decisions up front.
Absolutely. I wholeheartedly agree. It's a great experience for the client when that happens, and it's a much easier process for everybody then too.
It's harder in the moment though, because someone's quoting them 50 grand less for a similar thing, and they go, how come you 50 grand more? Well, because we've allowed for extra things, or maybe, you know, there's some things in there that we're putting in that others aren't, or there's a bit of extra leverage stage for something go wrong. And so that can sometimes be a little bit hard to manage up front.
Yeah.
But yeah, they do tend to have a better experience at the end of the day.
Absolutely.
They've got this too far in.
And what I find too is if you do happen to save them $4 or $5 grand on their footing costs, because they've already allocated that money in their total budget, they'll go, great, we're now going to upgrade this and upgrade that and spend the money anyway.
Yeah,
so
that's right. So have fun with it. Absolutely. Yeah. How's your experience been, Robbie, with footings and site costs? And
Lately, it's been quite difficult because we're entering in a lot of places that we haven't done any jobs yet. So new development coming to the market where we haven't had the opportunity recently to go get engineers on sites. We're not sure what we're playing with, you know, and there's a lot of developers out there that don't do the benching and retaining as well. So when we are judging a site works cost on the estimate, we've still got a lot of unknown factors in that point of view. Whereas we've been in some estates where we've done plenty of work, we've got a solid idea of where we can put the estimate roughly of what we think it is, and we're in a couple of grand either under or over when we've been lucky.
Yeah, I think some developers are catching on to that, and they're doing a lot of the work up front to sort of help that buying decision happen, and also to help builders as well as the clients sort of get a better gauge of pricing as well. So yeah, some developments certainly do it better than others, but I am seeing it overall in the marketplace as a general rule. Most developers are actually doing that now, which is great for everyone.
Probably the best question for you as well, if I'm a first time investor coming to you and I say, AJ, help me find a house and land package, what would be the best way to guide that first time investor through that process?
I think for me, it's about, let's count the money first. We need to know what we're working with. So what sort of budget have they got in mind? Have they been to a mortgage broker to actually test and pressure test that budget to make sure that it works? Once we know that, then we can kind of come back and go, okay, of that amount of money, how much are we looking at on land? How much are we looking at on build? And trying to pull all that together to come out with a solution for them. Every client's different. Every borrowing capacity is different. Everybody's got a different idea. One of the things I'm finding, particularly with the estates, is, you know, I can help you buy a block of land today, but we might not be starting to build for another 15 months. Versus an infill is, if it's on the market, if it's on realestate.com, or if we know it's coming up as an off-market transaction, you're going to be building a lot quicker. So, and of course, time is money in this business. If you're going to hold land and then hold it for a period of time before you can get constructing, that needs to be taken into consideration as well.
The opportunity cost in that. So if I wait 15 months, what could I be doing in between that? Sometimes, unfortunately, we see that the land gets delayed even further.
Correct.
And in some examples, we've actually seen that then the land contract then gets cancelled. So you've got someone who's been waiting for 2 years, then all of a sudden the land contract gets cancelled, or the situation changes as well. So as much as it can be a good strategy, you need to be really geared up for that as well.
It can be a great strategy if the land actually gets to settlement. You know, you've bought it in November last year, paid a $5,000 or $10,000 holding deposit, I don't know, mate, paid $300,000 for the block of land. It finally settles at $300,000, but the block next door is now selling for $350,000.
That's right. Yeah.
Great strategy if you can get away with that.
Absolutely. Yeah.
Do you find any other opportunities for people that say, look, we don't want to wait 15 months or we don't want to invest in South Australia?
Yeah, absolutely. So my business, we help clients all over the country. So got builds in Melbourne, builds in Brisbane, builds in Adelaide, of course, and then I've got clients that are based interstate as well. So Sydney-based clients that are, you know, sitting there going, why would I want to spend $2 to $3 million on a place in Sydney? So they'll come to me and I'll go, great, let's get you one in Brisbane, let's get you one in Adelaide. And of course, we then start talking about strategies around land tax. Land tax is a state-based tax. So if you've got all of your investment properties in one state, not only are you exposing yourself to more market risk by being all in the one state, but you're also exposing yourself to land tax as well.
Right. So we aggregate here in South Australia. So what you're saying is potentially if I buy one in Melbourne, they don't aggregate that.
That's right, exactly. And of course, different markets will perform differently at different times too. So, you know, if the Melbourne market is not performing as well as the Brisbane market, then it might make sense to be into the Brisbane market. If you've got a certain price point that won't allow you into the Brisbane market, maybe you need to be getting into the Adelaide market.
Do you find people are scared to jump into another state?
Absolutely. People love familiarity, right?
Absolutely.
Most of the time when I see a client, let's say they live in Tetra Gully, they go, I want to be within 5 minutes of Tetra Gully. When I ask the question, why? Well, I want to be able to drive past every week, want to make sure the lawn's been mowed, I want to make sure the rubbish bin's been put away. So quite simply, that's the job of the property manager. That's somebody will introduce you to. You don't want to do that. Let's take the emotion out of it. Let's start looking at some numbers. Why are we doing this? You're now a business as a property investor, and you want to be a profitable business, so you need to put yourself into the most profitable market.
Yeah, absolutely. I often have this conversation as well with people saying, do you want to be a landlord? Because you know what that means, whereas people sort of don't quite understand what being a landlord is. They get very emotional, very attached, and the way you would live and what you would do is not necessarily how somebody else is. So
Exactly.
you can't sort of say, well, I want to be a landlord, but I want to control how they live in my property. You need to have that separation. Absolutely. So,
And I think having all of these people as part of your team helps to take some of that emotion out of it. I've got some people that say I might try and save myself $50 a week by managing the property myself, and go, do you understand the process of leasing a property? Do you understand the process if they don't look after the property and you've got to take them through to the SACAT? Like, it's just so complicated, and that's why you pay a professional to do that. And whether it's the mortgage broker, whether it's the building inspector, the property manager, you need to recognise the value in that service.
I agree with that.
How would you choose the right property manager?
For me, it's around reputation. If I'm going into a brand new estate and brand new suburb, one, I'll generally visit and I'll have a look around. I'll look at the signboards, and then I jump on the phone, speak to the owner, speak to the actual property manager, ask them about how they do their business. I can't actually talk to the tenants, unfortunately. What I do with builders, though, I'll actually go on site. Right? Just introduce myself and then talk to the sparky, talk to the plumber, talk to the bricklayer, and I'll just ask them conversations around, have you got plenty of business? Oh yeah, this builder's giving me heaps of business. Great. Are they paying you on time? Yeah, they're paying me on time. Like, all of these are things that let me know how well the builder runs as a business. Because if, brickies aren't short of telling you if they're not getting paid on time, they will let you know, right?
Absolutely.
So that's a sign of the health of the builder. And property manager is similar. How do they actually process their rents for the tenant? How often are they doing the property inspections? All these things build that value around the client.
Because sometimes you get a 5% an agent or an 8% agent. Well, how do I choose my property manager off the base of 5% or 8%? People will tend to go for that 5%. What's been your experience? Has the percentages really made a difference for you, or it just really just comes down to finding the right person?
It is around the right person. My right person in Adelaide, though, has got a completely disruptive view of property management.
Oh, wow. Okay.
So they charge a fixed monthly fee for their leasing costs. So it doesn't matter if the property is being rented for $500 a week or $2,000 a week, it's the same fixed rental, fixed management fee.
Wow, okay.
So, and he basically says, it doesn't cost me any more to manage this property than this property, so why should I be charging this person more for it? So that's
It's quite a very different approach.
Very different approach, and quite unique, and it's been very successful for them. Most of my interstate-based property managers are all doing percentage of the rental income. What I find is, because I'm going back to these people now, my clients coming back with their second investment property or third investment property, we'll start at 8, then we go to 7, then we go to 5. So the more you have, the better deal you're going to get.
Still be open to negotiating that rate is a fair point.
Yeah.
Yeah, fantastic.
And most of the property managers, I try and use the same people over and over and over, so I get a bigger chair at the table. So when they come back and say, hey, this is going to be an 8% property, I go, don't forget, we've got another 25 JKB property clients coming your way over the next 12 months. Okay, we'll do it at 6, Andrew.
Fantastic, great. So you're in there negotiating for your clients as well. Fantastic.
Absolutely.
Yeah, great. So in terms of tips, what tips do you have for first time investors getting into the marketplace? What are some of your like quick tips?
I think the thing for me is, don't listen to the advice of your mates from the football club that have never done it. I see that all the time. Everybody knows somebody that's done it and done it wrong. It's a very emotional story. You need to delete the emotion and get back to the facts. I do most of my stuff on Excel spreadsheets, so if it makes sense to do it from a numbers point of view, it just eliminates the emotion out of it.
Yeah, so the numbers do the talking, and try not to listen to family and friends. Or if you are going to listen to them, my question is always, okay, so tell me what you've done. tell me your experience. And if they've invested before, then I may listen to their stories. But if they said, oh, no, I've never invested before, then that's probably not the best person to be taking
Correct.
advice from.
Yeah.
So tip number one.
Everyone's got a war story, so you got to eliminate the war stories.
Yeah, absolutely, absolutely.
I think the other one is having the team built around you, and don't be afraid to ask for help.
Yeah.
So if you don't have a mortgage broker because you've got a banker, or if you've never walked into a display home, like, don't be scared to do any of that stuff and start building that team. And if you don't know what the team looks like, then that's where I'll come into play. I'll be able to help you build that team and understand who needs to be part of it, and let you know when we need to engage those people in the team.
Fantastic. So team, what else?
I reckon time is the other one. Time waits for no man. Property values are also waiting for no person either. So as soon as you can get in any way, I think that's a good thing. Ideally, house and land, because that allows me to help the client, allows me to help you guys as well. But don't think that you can outsave the market. The market is just moving so fast at the moment. The cheapest time to buy property is today and 30 years ago. So get in as quickly as you can.
Yeah, I've got a bit of a similar saying to that. For me, it's more about, if you're a first home buyer, it just makes sense to get something as soon as you can. It's quite easy to do in terms of there's lots of incentives in the marketplace. You haven't got a property at the moment. Yes, there are some challenges to sort of getting in, but we've got some products that can help you. But certainly if you don't have something, having something's really important. So you're in the market. I think when it gets to your second or third, or when we start looking at investing, I think that's when it becomes a bit more intricate, and having all those conversations is important. But certainly your first one, you should be getting in, or trying to get in as soon as you possibly can, for sure.
Lots of clients too, if they are first home buyers and they want to build, they are building their forever home as their first home. And like, I can see it, because I thought that myself when I built my first home, and then 6 homes later I'm going, I don't know what I was thinking on that first one. But just helping people understand that getting into the market, even at a base level, is better than doing nothing. And if you can't afford your forever home, that'll come as your second or third home.
Absolutely.
But get into the market now.
And I think more than ever, Andrew, what I'm seeing today is because of the large or quick spike in prices, and especially in South Australia, we've been quite a balanced market for quite a long time. It's starting to push people further out. So I think before, the conversation or the thought process of, I can live in the area that I grew up in, and I can build my forever home. Now it's a conversation of saying, well, actually, you might have to go to a whole other suburb or push further out, even just to get into the market. So I think we're seeing more and more people not only think about their forever home, but hang on, that forever home maybe be in another suburb never thought about before. So I think that's becoming a bit more daunting. I am seeing the move happen. So we're starting to see other suburbs sort of grow very quickly. And that talks back to the infrastructure, the roads. There is a lot happening in South Australia in that sense. But yeah, certainly today it's more about going, hey, maybe I need to consider another suburb. And that's a very daunting process, I think, or to be able to get your head around that change in suburb.
Especially if you are well set up in your suburb. Doctors, dentists, schooling, the social networking. To pick that up and go somewhere that's 30 minutes away can be daunting for people.
Absolutely, yeah. So we've seen that a lot.
Lastly, AJ, in your opinion, what do you think Adelaide's property market is going to look like within the next 12 and 24 months?
I don't think it's going to slow down. I honestly think it's just going to keep pushing ahead. We're at, I'd still like to say, affordable prices. I know, Adelaide's been touted as one of the fastest moving markets over the last 12 months, but I can't see it easing off. I think interest rates are at a comfortable level at the moment. People still have a level of affordability, and we can still continue to grow our population, and that is going to continue to put demand on housing. And whether it's first home buyers, first home builders, or whether it's people trying to enter the property market through investment, there's going to be strong demand. So I think that's just going to keep the focus on housing prices, and I think it's just going to keep going up.
Yeah, I also think too, we've got a government in South Australia that is very proactive and very focused on growth and building the state as well. So they're investing a lot of money into infrastructure, but as well as growing the state. And I think when you've got a government that's policy is to grow the state as well, then certainly you can sort of have a bit more confidence going into that market with the mindset of we've got a growing economy and a growing state. I think as an investor, that sort of helps you to have a bit more comfort in that space as well.
Yeah, absolutely. Anybody that's driven down South Road in the past 2 months will know how much money the government is spending on infrastructure projects at the moment. And of course, all those projects need people to be working on them. And some of those workers are coming from interstate into Adelaide as well. So, they've all got to live somewhere too. So yeah, it's a great outlook for South Australia.
It's a positive space. So if you're investing right now, what state would you be investing in right now?
Look, for me, there's two. It's Adelaide and Brisbane. They're the two key locations that I'm going to. The thing about Brisbane is the 2032 Olympics. If you think there's a lot of infrastructure projects in Adelaide, you need to go to Brisbane. You'll see exactly what's going on up there. It's just bonkers. But we're also seeing that reflective in pricing as well, and also the timing around the delays from purchasing versus getting access to land is starting to blow out a little bit. Adelaide will always be home for me. I like Adelaide. It's safe and comfortable. I know all the suburbs, and most of my clients are Adelaide based, so Adelaide's always keen for them as well. And of course, if a client comes in and says, Andrew, it's Adelaide or it's nowhere, then it's Adelaide. Let's do that. I've got no problems with that.
Absolutely. Thanks for today.
Fantastic. Thank you for your time, mate.
No, pleasure. Thanks, boys.
Nice to meet you. Pleasure.
Thank you.
Thanks, Robbie.